Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. Today we're taking a look at two top stocks to consider buying and holding for the long term to ride one of Wall Street's biggest megatrends. And those two stocks are Quanta Services, which trades in the ticker PWR, and AECOM, which trades in the ticker ACM. Before we get into everything, remember to subscribe and leave a review wherever you listen to your podcast, and make sure to check out our Zacks.com/promo page for a look into some of our services, portfolios, and more. So normally in these episodes, I do kind of a broader market recap, but today we're going to do a broader recap of the big Wall Street megatrend that these two stocks are going to be riding, and they already have been riding for several years, and they will likely for years and possibly decades to come. So artificial intelligence has been the hottest area on Wall Street since OpenAI launched ChatGPT to the public back in November of 2022. AI, though, was growing well before that, of course, but that was kind of an inflection point that kicked off a wave of AI-focused spending from the biggest tech companies on the planet with no end in sight. AI is poised to possibly permanently alter technology, the broader economy, and therefore the world. NVIDIA and other tech giants are already generating massive AI profits, while Microsoft, Google, parent Alphabet, and others are committed to spending hundreds of billions of dollars on artificial intelligence data centers and beyond. But the AI spending boom is part of a larger megatrend that will drive the economic expansion and the stock market for the second half of this decade and beyond. The U.S. is in the early innings of a multi-decade infrastructure spending boom and reshoring boom that's poised to become the most dominant trend on Wall Street as trillions of dollars are spent across everything from natural gas power plants and transmission lines and nuclear energy to AI data centers and semiconductor manufacturing plants to roads and bridges. So these compounding megatrends and supercycles across tech, energy, construction, deglobalization, and onshoring create kind of a once-in-a-generation opportunity for investors. The U.S. federal government, technology giants, big banks, and other big movers and shakers are leading this infrastructure spending charge. JP Morgan and Goldman Sachs and the likes view the new age of modern infrastructure spending as one of the most important pillars of the U.S. economy and stock market going forward. Global clean energy investments, for instance, hit a record of $2 trillion in 2024. Those investments are expected to hit up to $2.5 trillion annually this year. That's just on kind of the broader, quote, clean energy space. And then U.S. investor-owned electric utilities are projected to spend $170 billion on capex just in 2025. That could get up to $200 billion annually by 2027. That's expanding the grid and all of that to help onboard all these AI data centers that are using a ton of energy. And on top of that, aging and fading U.S. infrastructure is finally starting to be repaired and revamped. So this is kind of the backdrop for all of this. And this is all happening, especially with the AI boom happening as the U.S. slowly tries to wean itself off of fossil fuels at the same time that large data centers are consuming nearly as much electricity as a mid-sized city, and generative AI platforms can use 10 times energy as a typical Google search. So this is the backdrop for all of this. We know that the likes of Amazon, Microsoft, Alphabet, Meta alone are going to spend up to $325 billion on AI capital expenditures in 2025 alone. So this is kind of the backdrop, as I said, for these broader mega trends that's going to be happening for the back half of this decade and beyond, that's going to drive the stock market and the economy going forward. And obviously these all won't be easy, and it will take years and years and years to make all this happen and prepare for the future. And these two companies that we're diving into today are prepared to benefit from these broader like infrastructure and energy and construction megatrends. And the first of those two stocks is Quanta Services, which trades in the ticker PWR. Quanta Services operates across the broader power and electricity infrastructure space. It benefits from the megatrends we just dove into, including electrification and grid expansion. It provides a wide-ranging set of infrastructure solutions for utilities, renewable energy, communications, pipeline, energy industries. Its services include designing, installing, repairing, and maintaining energy and communication infrastructure. So it works with across electric power, underground utilities, renewable, broadband, It offers engineering solutions, kind of anything you can imagine in this broader space. The Houston, Texas-based company does. It's averaged 21% sales expansion between 2021 and 2024, including 13% growth last year. So it's gone from under $2 billion in sales in 2004 up to $24 billion in sales, or roughly $24 billion in sales last year. And after a slight dip in 2020 during the COVID downturn, as I said, it went on a boom run. It posted 16% growth in 2021, 32% growth in 2022, 22% growth in 2023, and as I said, 13% growth last year. So this is kind of the backdrop for why we're so bullish, and I'm so bullish on this mega trend of broader infrastructure and electrification and all of this going and growing for years and years to come. So it closed 2024 with an all-time high backlog in its renewable energy infrastructure solutions, which is a great sign. And as we kind of alluded to up top with nuclear energy, the Trump administration last week rolled out an executive order that's going to push forward the nuclear energy renaissance that's already underway and kind of speed up the production of these new age power plants and older school nuclear power plants to support this AI boom, along with natural gas rolling out more as well. So this is the backdrop for all this. Quanta said that it expects another strong performance in 2025, including double-digit growth in revenue, adjusted EBITDA, and earnings per share, as well as the ability to achieve another record backlog. So looking ahead, we're calling for 14% growth on the top line in 2025, and then 10% growth in 2026 to reach nearly $30 billion. And that's versus just $11 billion in 2020. So huge growth for Quanta Services over the last 5+ years. The infrastructure solutions company is also set to expand its adjusted earnings by 15% this year and then 13% next year. And this is part of a booming growth over the last decade on the bottom line for Quanta Services. And it's topped our estimates in every quarter over the last 2 years outside of two. And its earnings estimates have trended higher for 2025 and 2026. To help it earn a Zacks rank number 2 buy at the moment. So in terms of its stock price performance, the stock is up about 175% in the past 3 years. This is crushing the construction sector, which is up around 60%. And if we look over the last 15 years, the stock is up 1,500% versus the construction sector's 325%. So it's been on a boom run, and it started really taking off kind of in 2020. So the last 5 years has been a really impressive period for PWR stock. At the moment, it's facing a little bit of resistance at the kind of top end of its trading range over the last year. So it's back above all of its key moving averages, but it's stalling out right below. It broke out to all-time highs at the very beginning of 2025 briefly, and then kind of tanked after it just grew a little bit too overheated. So in the near term, along with kind of the broader market and stocks like NVIDIA, it's trying desperately to break out and reach new all-time highs. So that's the position we're in at the moment. It could face some near-term selling pressure, and some investors might want to wait for it to possibly pull back a little bit. But at the moment, its 50-day moving average is inching ever closer to climbing back above that 200-day after the furious rally off those April lows, along with the broader market. You could say that its valuation is a little stretched at the moment, but Wall Street's been willing to pay up for the stock for a long time, and it's still trading well below its all-time highs in terms of forward earnings. And its engineering, research, and development services industry, which is a subset of that construction market, is in the top 22% of over 240 Zacks industries. And as I mentioned, it's a Zacks ranked number 2 buy because of its positive earnings revisions. And Wall Street's really high on the stock, with 18 of the 24 brokerage recommendations for Quanta Services coming in at a strong buy. So certainly worth putting on your radar here at the moment, and possibly as a long-term buy and hold candidate to ride the mega trends we've talked about. And now we're going to move on to AECOM, which trades in the ticker ACM. It is a consulting powerhouse specializing in planning, constructing, and maintaining infrastructure projects. It works with clients across 5 main markets: energy, healthcare, national governments, transportation, water. Its diverse clients base accounts, it works with clients kind of across the various array of offerings: architecture and design, construction management, engineering, program management, environmental services, and tons of other areas. It boasted it landed the #1 spot on the Global Environmental Consultancy ranking for the 7th consecutive year by Environment Analysis. It's at the forefront of the energy transition, and it's one of the only global infrastructure companies that's accredited by the United States National Association of Energy Services. It grew its revenue by 12% in 2024, with its just earnings 22% higher. The company closed last year with total backlog and pipeline at all-time highs, helping it feel upbeat and expecting 2025 to mark another record year for all its key financial metrics. It's projected to grow its earnings per share by 14% in 2025 and then 11% again in 2026, while growing its revenue by 6% both of those periods. Its earnings revisions have trended higher recently for 2025 and 2026 to help it land a Zacks rank #2 buy as well. It also announced late last year that it increased its share repurchase program authorization to $1 billion and boosted its dividend by 18% to 26 cents per share. It's grown its dividend at a compound annual growth rate of 20% since its inception, so that's a positive sign. And over the last 10 years, ACM has outpaced the construction market. It's up 215% versus the construction market's 174% climb. Over the last year, the stock's up about 26% versus the construction market's 3% drop, yet it's still trading around 8% below its all-time highs and 12% below its average Zacks price target. It's trading in a similar situation to Quanta Services and many other stocks that have rebounded heavily off those April lows. It's trying to break out right above kind of the top end of its trading range and then get back up to those peaks for this stock, late 2024, but other stocks, it's early 2025. So the next few weeks, we could either see kind of a pullback if the bulls finally decide to take some profits after the furious rally, or possibly we break out the new highs in the near term. But at some point there will be a pullback. So for both these stocks, if you're a long-term investor, you don't need to try to time these things exactly, but it's possible you want to wait for a little bit of a pullback that, though, might not come for weeks, and it's really difficult to tell what's right around the corner. So don't try to time things precisely, because we could, as I said, in the next few days and few weeks, easily be at new highs, or we could dip down a little bit in the near term. Wall Street's also really high on this stock, just like it is with Quanta Services, with all 10 of the brokerage recommendations that Zacks has coming in at strong buys. And on the valuation front, it's trading 17% below its all-time highs at 19.6 times forward 12-month earnings, which is also not too much of a premium to the broader construction market or sector, even though it's outpaced it. And it's not too far above its 10-year median as well. And just like it's the other stock we mentioned, it is part of that engineering and R&D services industry within the construction sector, and it lands a Zacks rank #2 buy. It's also worth pointing out that both of these stocks are in the Alternative Energy Innovators service that I manage here at Zacks, and both are ready to be big beneficiaries of the broader infrastructure and energy megatrends that we talked about a lot up top. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.